Hi guys, welcome back to another video here. So guys, in this video I want to share with you an update on my local portfolio in terms of the performance compared to the top 40 index here in South Africa, which is a group of 40 big companies that are grouped together, and they represent the JSE, which is the South African stock market. So if you are lazy to pick stock, to hand pick stock, you can actually buy an ETF that tracks this index. So that means that you'll be owning these 40 big companies that are grouped together to represent the JSE. So the average returns of this index for the past 15 years, of course, it's been around 8%, sometimes 10%, So if you want to get those returns per annum, like 9% or 10% or 8%, you can buy this index and buy an ETF or that tracks this index, because you can't buy the index directly. There's an ETF that is there which tracks this index. But if you don't want to buy the market, because when I'm saying the market, I'm referring to this index, which is the top 40 JSE index, you can also handpick your preferred stocks that you think they will provide you with big returns in order to grow your wealthy or to grow your money. So that's what I've been doing. I don't want to buy the top 40 index because I believe that I can beat the index. I can I can choose specific stocks or specific companies that I believe that they will do well over a long term. So I can buy those shares, I can invest into those shares, or put my capital at work by buying the shares of those companies so that over long term they make money for me as the share price grows up. So what you see here, it's two graphs that actually represent my performance and also compared to the top 40 companies index. So the red line here, it's my performance of my portfolio based on the companies that I chose to invest into by buying their shares. So my performance compared to the index is represented by these two graphs. The red one is me, the gray one is the index. So as you can see here, the red line, which represent my performance, it's above the gray line. You can see the discrepancy is too huge, or the distance between the two lines is too big. That shows that I am beating the top 40 index. I am outperforming the top 40 index. So I've choose quite performing stocks, over time. You can see this has been like since from 2019 there up until now. I've been doing quite great. So the secret on this performance, guys, it's not that difficult. It's all just following simple principles which are all over the internet. It's free information because the people that have been using these principles, they've achieved so much in terms of wealth creation for themselves and also for other people, because I'm talking about people such as like Warren Buffett, Peter Lynch, and some of the great investors out there. They wrote books and they share the same principles that you can use and apply and grow your money, which is buying good companies when they are undervalued. So when they're undervalued, normally in most cases a company becomes undervalued when it faces short-term setbacks. If it faces short-term setbacks, the stock will decline, will go down by a lot because of panic, because the people that buy and sell shares, it's human beings and they are emotional. So when a company hits a problem, because a company, it's a business. Businesses go through challenges. So when that business faces challenges, of course, that will be shared, publicly. So that's the public information, was as long as the company is listed publicly, whatever problem that it faces, it must share. So normally in most cases, shares will tend to trend all the way downward because the people that buy shares and sell shares, it's not only investors. Some of the people that buy and sell shares, it's traders. And their intention with the company when they buy those shares is to hold those shares for short term. So they are trading. And there's also computers that are trading, and they are trading through robots, or algorithms that are using certain information to trade. So when they receive those negative news, those negative information, or those news that are released by the company addressing or sharing the information to their investors about the short-term problems that are facing, those algorithms or those computer robots and those traders, they will panic and then they will sell those shares because they were trading. Now, when the fundamentals change, and they will sell those shares because they are not into those shares for a long term. They are there just for short term, just in and out. So they will tend to sell those shares. Then that's why you see a stock will drop a lot and go down a lot, all the way down. And as long-term investors, if this is a good company, now that's when now we come and like, okay, now this news, actually we assess them and like, now this news or whatever problem that this company is facing, it won't affect the long-term profitability of the business. It's just a short-term problem that will be resolved, but for it to be resolved, it's gonna need some time, 6 months, 12 months, which is a year, or 18 months to be resolved. Then after it has been resolved, the company will then come back again and be profitable. It will increase its profitability after they've overcome that temporary setback. So that is an opportunity to us long-term investors. That's when we say now we buy when everyone is running away. We buy when there is blood on the street, when everyone is scared, shitting their pants. We buy because the company during those times, they tend to be undervalued. But not all of them, they will be good companies to buy. Remember, it must be a company that is profitable, the company that has a good competitive advantage. A competitive advantage is also called as a moat, M-O-A-T, a moat or an economic moat. So it's like an insulator, a protection of its business model that protects the company from competitors. So if a company has that and experiencing short-term problems and the stock is declining, and when you look at the reasons why the stock is declining, it doesn't affect the long-term profitability of that company. It's just a short-term setback. That's where you buy. We say now the company is undervalued. But for it to be undervalued, you have to also do some financial models. You have to estimate the true worth of the company, which is known as the intrinsic value. So you need to use a financial model known as a DCF, which is a discount cash flow, to estimate the true worth of the company, which is also known as the intrinsic value. And if that intrinsic value it's below or it's above, if it's above the selling price. Selling price is the price at which the stock is trading, in a stock exchange. So if the intrinsic value that you have estimated, it's above that selling price. Now the stock it's undervalued. You have to buy shares there. You can buy shares. Then over time, as the company resolves its problems, that share price will go up and match up with the real worth of the company. So that is your margin of safety. That's what you want, because as the stock goes up, if you bought it below the intrinsic value, you're going to be gaining profits in terms of capital appreciation. Your capital will grow in terms of the value. That's all what you do. And all these legendary investors, gurus, on their books that they wrote, that's what they are saying in most cases. And another lesson that I would like to share with you is also to understand what you are owning. And it makes it easier when you stick to your cycle of competency. For example, with myself, when I started investing, of course, I was focused into tech stock, Now, I don't mean that I'm not also focused on tech stock, because I also understand them, but I've moved a bit to mining stock, hence, and I've achieved quite great performance. I think I came at the right time to mining stocks, because it was just before the bull market, starts in gold, and I'm enjoying the bull market of gold now, and also now I'm investing into copper, because I believe copper bull market will continue for the next decade, because we are in a supply shortfall in terms of the copper. There is more demand compared to the supply. So it is important to understand what you own, and you must be able to explain the reason why you own the stock in less than 2 minutes to a child or to anyone. If you can't explain in less than 2 minutes why you own the stock in your portfolio, that will be a problem. It's a problem, because that means you don't understand what you own. So it's important to buy stocks when they are undervalued. Not any stock, but companies that are good. A company that is good is a company that makes money in terms of earnings, which is profitability, and their earnings must be consistent. They must be consistent in terms of going up. They must be predictable, and it must have a good balance sheet, in terms of the cash that it owns, cash that it has into its balance sheet compared to its long-term debt. So you want to buy a company that has more cash compared to debt, company that has assets compared to liabilities. A company that has a strong balance sheet, you understand? A strong balance sheet. It's a very stable company. Means that the chances of it going bankrupt, they are very small. It must be profitable, and it must have a competitive advantage, compared to its peers. It must be protected from competition, unless then you are taking more risk, because that's less risky companies. If you are taking more risk, it's also good, but you must do your due diligence and research and understand the risk that you are taking. For example, with me, I've taken risk to mining companies that are not yet producing. I mean, they are still exploring, looking for minerals, trying to build a mine, or resuscitating a mine that was dead previously. Dead means that it was abandoned due to low commodity prices in the past, but now the commodity prices are up, and then now when we do all the technical studies, we can see that this mine, it can actually be profitable at this now current economic environment compared to the past. So those are the mines that I'm buying now, which are risky, but because if you look at them, they don't have like competitive advantage. They are not yet producing, they're not making money, their balance sheet is still shaky. They have debt, they don't have a lot of cash, but they are raising capital to build those mines. And my belief is that in future, as long as these commodity prices such as gold and copper stay at those high levels, this company eventually will make profit, and they will grow and acquire more assets and become big companies in future. And so far, I've done quite well. Hence, that's why you saw earlier on at the beginning of this video, I showed you my portfolio, which is red compared to the gray one. Of course, that parabolic move upward, it's as a result of one of the companies that I've bought before it took off, which is Orion Minerals. And I bought 1 million shares, and I spent like 200,000 rand to acquire those over 1 million shares. And by my purchasing price, it was around 19 cents. And currently now the stock is around 40 cents, trading around 40 cents, and it's listed in the Johannesburg Stock Exchange. It's an Australian junior mining company which explore for copper and develop copper mines. So now the copper prices are going up, which is something that I know that it drives the share price of the commodity or of the mining stocks. Is a commodity price. So now we are in need of copper, and we are running at a supply shortfall. There is more demand than the supply of copper, and that demand is driven by what? I mean, there is billions of people that do not have access to electricity in the world. That's a fact. And those people need electricity, and electricity needs copper. And then we are also advancing technology at a rapid rate. I'm talking about artificial intelligence. Now, AI needs data centers. These data centers needs what? Electricity. So electricity needs what? It's copper. Then you go to electrical vehicles. They need what? Copper. Housing market construction, it's what? It's copper. So we'll forever need copper, but we have underinvested into copper in terms of copper mines. I mean, the current mines that are producing copper, they are struggling now because of low grade reserves and resources. So now they have to handle more material that is low grade. Once you are a copper mine and your grade start falls, or any mine when your grade start falls, you're gonna incur a lot of cost, a lot of mining cost, because now you have to process a lot of run of mine to achieve the same product or the same output that you were previously achieving. But now you have to like handle a lot of tons of run of mines, and those tons of run of mines, they will cost you a lot of money. So now these big operations, they are now kind of struggling in terms of controlling the cost. So that is one of the challenges that makes copper to currently, be in short supply. So we need to build more mines in order to meet the demand of the copper. And it takes 17 years to build a mine. So if every year we need a bigger mine that will produce tons of copper every year to meet the demand of the copper, because that is the current state in terms of the demand of copper, but that is impossible because it takes 17 years, 16 years, around 16 and 17 years, between 16 and 17 years to develop a mine from exploration, from discovery, up until to production. That's 16 to 17 years. But now, currently now, with the state of the copper supply shortfall, we need a big mine each and every year to be brought into production, which is impossible. And we're still going to need more copper because the global population is growing up and the economy is also growing, and it needs copper, and we are running out of copper in terms of the supply. The demand is more than the supply of copper. Hence, I bought Orion Minerals, which is opening up an old mine in the Northern Cape and trying to bring it back to production. I bought it because it's local, and I know here in South Africa we do have skills in terms of the labor to mine, and also our government is supporting industrialization so that it can improve employment, and hence they were the first ones to provide funding for these junior mining companies such as Orion Minerals to actually do these developments, this exploration, all this work to bring back that mine, because the governments know that this mine will employ people and that gonna grow the South African economy. So hence you saw earlier on my portfolio, it's growing quickly up because the stock, it has moved from 19 cents, which is my purchasing price, all the way to 40 cents because of the copper prices are increasing because of the demand. And I believe that copper prices will continue to increase, and I will continue to benefit from that junior mining stock. It's not only the copper mine that I own into my portfolio. I also have iron ore bloods, with Ivanhoe Mines, So Ivanhoe Mines owns iron bloods here in South Africa, in Mokopane, which is a PGM mine, but they also have a byproduct of copper. But their biggest copper operation is in DRC, which is called Kamoa-Kakula. I also bought it when it was undervalued. The stock last year in 2025 around May declined a lot because they experienced what we call a seismic event in mining. Seismic event is just an earthquake underground, due to instability, because as we blast, we are actually weakening the fractures, natural fractures such as faults, joints, and some of the structures such as dike, So at some point there will be movement between those faults. In those faults, once there's movement, there will be gonna be ground vibration. Then some of the sections that we are mining, due to that ground vibrations, they can collapse, and that's what happens. That's what I think happens with the Kamoa-Kakula mine in DRC, and hence a portion of the mine or a section of the mine was affected by that, and it was flooded, and people had to be evacuated. Operations were stopped for a couple of days, and hence the share price went down because there were traders there There was also algorithmics that were trading that stock. Now it went all the way down. Then I did my due diligence and studied this. Why the stock fell? It was okay, seismic event. I'm a mining guy. I understand seismic events. We've been experiencing seismic events in the gold mines here in South Africa, in the Western. But those mines are still operating and their share prices are up. Even South Dips, Sibanye, around the Kloof operation, Driefontein, Beatrix operations, they've been experiencing seismic events even before I was born, but they're still standing and mining. So a seismic event is just a short-term setback. So hence, that's why I bought the shares of Ivanhoe Mines. And I'm also looking forward to add more shares within that field. So in a nutshell, what I'm trying to tell you in a nutshell, like just to be short, it's to look for good companies that are experiencing short-term setbacks or temporary setbacks, but they're great companies. And when they are undervalued, these good companies, you buy them. You buy the shares of those stocks. But you need to do your due diligence and do your research to understand that company on how it makes money, understand the competitors, understand its competitive advantage, and look at these financial statements to check for the stability into their balance sheet. You don't want to buy companies that have weak balance sheets, because that company can go bankrupt and you can lose your money. Now, for adding more shares or buying shares this year, I haven't bought anything, but I'm going to add shares on my current stocks that I own in my portfolio. So companies such as Jupiter Mines, because it's a company that has a big asset, low cost, they are even paying dividend during manganese cyclical lows, because Jupiter mines manganese. They own TP and Manganese, which is here in South Africa in the Northern Cape province. I'm already up over 50%. I've acquired the shares around 19 cents. It's currently trading around 30 cents. And I'm up over 50% in my positions, because I invested over 100,000 rand. So I'm up around 6,000 Australian dollar, which is over 60,000 rand. So that's the stock that I'm looking for, a pullback, just a little bit retracement, and then I will add more shares on Jupiter Mines. Another stock while I'm looking forward to add shares this year, it's also Ivanhoe Mines. I already invested over 60,000 rand, and I thought the stock was going to go down a bit, but it did not. It just bounced from my entry point and then it went all the way upward. I'm also currently up over 40% in that, but I want to add more shares because they have a huge deposit, high grade and low cost, and I believe that they will be very, very profitable from 2027 and beyond, because currently now they are spending a lot of money developing their operations. They also own Blood Reef, which is here in Mokopane, which is a PGM mine, and which is going to be one of the largest low-cost producing PGM mine. So Ivanhoe Mines, Jupiter Mines, these are the two companies which I am going to add a lot of shares and invest a lot of money into them this year. So far this year, I haven't invested anything. I haven't bought any shares. I'm just sitting on the sideline looking for opportunities such as big corrections to these companies. So I haven't seen that. And also in the US, within the US market, the S&P 500 is still up. It's quite extended, and the US Federal Reserve has been lowering interest rates, which favors the stock market. So the stock market has been going up. I'm just waiting for a crash or a pullback. Then I will be just flooding the market with my savings. Currently now, it's just an opportunity for me to save and accumulate those savings so that I can just deploy them when the opportunity comes, and then just deploy them to the market and put them at work by buying good quality assets. So if you are a new subscriber and you or no, a new viewer, man, not a subscriber. If you're a new viewer here in my channel, you are new to the channel and you like my content, please don't forget to subscribe and support the video, the channel, I mean, rather, so that I can, and share it so it can reach more people out there that need such information. Don't just watch without supporting. Please just click the subscribe button, the like button, share it so that it can reach other people who wants to take part into investing into shares and building wealthy through investing into shares and buying companies, shares of companies, and own companies instead of just consuming their product, you know. All right, guys, with that being said, I will see you into the next video. In the next video I'm gonna produce another video soon when I will be sharing more information actually on stocks that I'm buying, the reason why I'm buying it. Of course, it's gonna be Ivanhoe Mines or Jupiter Mines in my next video. With that being said, I will see you in the next video, guys. Bye and happy investing.